Hi, I'm Jim Jubak, and welcome to my Quick Pick video. This week's Quick Pick is actually a sell, and it's Quick Pick Sell UUP, which is the dollar ETF. Now, the dollar's been a pretty good thing to hold in 2022. So for 2022, the ETF that I use to track the dollar and that I've recommended on my site, on my paid site, is the Invesco Deutsche Bank, which is DB, US Dollar Bullish Fund, or UUP. And it was up 9.46 in 2022. It's down, however, in 2023, down by about 1.22. And you can see the chart is really very revealing. You've got all this rallying and then all this decline. And what we really got here is a classic set of anticipations that the stock going up in 2022 is because people were anticipating that the Fed was going to raise interest rates, and the Fed and U.S. interest rates were going to move ahead of everybody else. And now what we're getting in 2023 is a sense of, perhaps rightly, perhaps wrongly, the Fed is coming to the end of that while other countries are still ramping interest rates higher. So, I mean, the key thing here is that even for the dollar, there's no free lunch. That if indeed we're going to get an end to Fed interest rate increases, that we're not going to get, that the economy is going to be slow, but not so slow that the Fed needs to do anything about it. All those things really that are reversals of what was working in the dollar's favor in 2022. So we could look to relative weakness in the dollar into 2023. And then, of course, you've got this big thing sitting out there. And that thing is the debt ceiling crisis. I believe we will walk right up to the edge, and I hope we don't walk over. But Janet Yellen at Treasury said, hey, we can juggle things and we're probably good until June. And after that, if we don't raise the debt ceiling, the federal government will not be able to borrow enough money to meet all its obligations. The Republicans have said, well, we can prioritize and we'll pay Social Security and our debt on the interest payments on our bonds. I don't think financial markets work that way, as well as the fact that that a lot of the people that are talking about not paying are federal contractors, businesses, etc. So not paying those people would indeed lead, I think, to a recession, as well as I think we'd see another notch down from S&P and Moody's on the U.S. credit rating if we get to that. And of course, there's always the possibility that the Republicans will simply decide that walking over the cliff is a neat thing to do because it puts more pressure on the Democrats to cut spending. I think this is a more serious debt crisis than we've seen before, and it will have an effect on the dollar. So I'm going to sell UUP out of the portfolios that have it online because I really don't want to be long the dollar as we're going into a period of dollar weakness. I don't necessarily think we're falling off the cliff here, but hey, if you want to still get exposure to currencies, I think this might be a time to think about gold rather than a dollar fund. So I'm going to be looking for a gold ETF and recommending one on the sites. Thanks very much for watching. If you like this video, please give it a thumbs up. If you want to subscribe and get notification of when we do the next one, you can subscribe to my YouTube channel. It's free. If you want more of my stuff, including a portfolio that probably will show a little bit of gold, you can go to my free site. That's jubakpicks.com. If you want 6 portfolios and definitely a portfolio that will show some gold, you can go to my paid site. That's jubakam.com. You can find all the links to those down below. Thanks very much for watching.